us Peter McGuire, who's the CEO of AustraliaTrading.com, who's now joining us. Hi, Peter. Good morning to you. Thank you so much for taking the time out and joining us today. Peter, the hottest news right now in global markets in India, both is the tariff news. A big news coming in yesterday, just before the 1st of August deadline for tariff for India, is that Donald Trump is basically saying that India might be hit by a good 20 to 25% tariff. Now, though India is a good friend, but India is charging more tariff than any other country. What are your thoughts on that? Because Japan has been able to negotiate a good 15% tariff, but for India, it seems the situation doesn't seem to be that great.
No, and good morning. I tell you what, it's really hit everyone by surprise, certainly looking at it from the fabric of the tariff deals and who's getting what and how it's being put together, and then the situations naturally also with China. So as it rolls forward, I think it's hit everyone by surprise, and it's taking a little bit of a gulp to digest the impact that this is going to serve on naturally the Indian economy. And moving forward, what is President Trump? Is he able to negotiate at a later stage to the benefit of the strategic relationship between India and US for the benefit of India? So I think it's a bit of a wait and see at the moment, but it's certainly going to be felt, I would think, by companies manufacturing in India would have to warehouse that cost.
That's right. Hi, Peter. This is Kanishka also joining in. Well, that's about tariffs, but I also wanted to talk to you about the oil prices. There's been a 3% jump in oil. It's more about Trump's, what do you think? Is it more about Trump's pressure on Russia on easing trade tensions? Or, with Brent and WTI, they are at the highest level since June 20th. So do you think this rally is sustainable, or is it just news driven? If you could help us with your near-term price targets for both Brent and WTI?
Well, good morning again. I think it's first off, yes, I feel as though it's news driven. Secondly, the impact as far as Russia, we're all very conscious of that and how it's going to be impacted from secondary sanctions on purchasing Russian crude, the impact that would have on China and other countries that are purchasing that crude. President Trump certainly, everything that I've read, is certainly not concerned about a higher price at the moment. He's prepared to increase his own production significantly. So the whole situation, I think, has just had a little bit of, hot energy, pardon the pun, driving prices up. I feel as though it'll probably cap out at this sort of mark unless we were to see something dramatic happen. And I think that it was probably a little bit of overselling. The market's trended up, and I'm listening to what the likes of Howard Lutnick and Scott Bessent are saying as far as moving forward.
Right. Peter, let's keep with crude then. We have seen some crazy levels on crude. In fact, we were sub 70. We have seen some major moves coming in on crude. What are the levels that you're watching out for as far as crude is concerned, or generally oil is concerned? Because we've suddenly seen a jump up in oil coming in. Levels that perhaps you would see oil perched at by the end of this year?
Well, I think it's still going to be range bound, unless we see something dramatic happen from geopolitical, secondary tariffs, uncertainty across the production side, or you're looking at weather outages. If it stays relatively fine weather moving forward, then I feel as though you're still going to be that $60 to $70 price handle. I expect there's going to be a glut end of Q3, start of Q4, and leading up until that point, you could see a little bit of volatility. But overall, I feel as though the prices will trend to the downside more than the upside. And so that's where we sit at the present time, looking at the market. And I think by year end, I think consumers are going to be more satisfied than what they are at the present.
All right. Thanks, Peter, for that view. And thank you so much for joining us this morning and helping us, weigh in your thoughts when it comes to tariffs and both the jump up in oil prices. Thanks so much for joining us. On that note, we'll let you go.
Thank you.
Well, that was about tariffs.